So guys, this is the second example of how to apply this setup. Okay, so if you look, observe very well what I'm doing. I don't go back to maybe something that happened 100 years ago and start sharing it with you. I can actually go back to maybe 3 months ago, 4 months ago, last year, and start sharing. Okay, but I don't want you to feel like this thing is not something I can do maybe on a daily basis or every week. I might not see my setup. Guys, I'm showing you something that just happened yesterday. The previous chart was just this week, so this one I'm about to share with you again is something that just happened. Okay, it's not like going back in time. Okay, so if you look at this particular the current chart right now, you can see that we are actually trending up, right? Clearly we are trending up. So as we are trending up, all you have to do is to identify structure, right? So let me clearly show you exactly what we are looking at. So remember, this thing happened, this chart you are seeing is this week. All right, so we had a break of structure right here. Okay, then we also break another structure right here. Okay, so after that there is another level. Okay, but let me just give you this. So after this, first of all, we left liquidity here, okay, behind, which is very important based on our strategy. We always want a liquidity zone to be taken out. So we also left another liquidity here. We left a liquidity here, and also liquidity here. So look at what's happened. At the end of the day, price retrace back and take out this liquidity right here. You can see a clear sweep of liquidity. You see a break of structure up here. Then when this liquidity is being swept, after the price take out this liquidity, you then look for the other block, right? Remember, we had our candlestick, as we said. We have the impulsive candle, which shows us as kind of gave us an institutional participation right here. So we also have a fair value gap at this point. Okay, this is a fair value gap. Then you simply want to mark out your other block, which is the last opposite candle. This is going to be our other block zone. Then let me just delete this. So all you have to do now is to go back to 15 minutes time frame, which is your lower time frame, where you're going to be waiting for the price to retrace back to our zone. So we have our setup now. The next thing we want to see is our entry. So this is the 15 minutes zone where the price retraced back to our other block. Now at this other block is where we are going to be buying. Okay, then all we have to do is to look for any pattern. You can see it glaring at us right here. You can just see the double bottom right here. Okay, you see the double bottom right here. So you can actually make an entry using double bottom, as easy as that. You can easily look at this and say, okay, I want to use trend line for entry. Then you simply draw your trend line maybe from here to here. Okay, then you use the break of trend line to make your entry. You can decide to use break and retest of trend line to make your entry. Everything is here. If you want to use what is it called, if you want to use your double bottom, this is where you have a bullish engulfing candle. Okay, after this bullish engulfing candle, you are going to be making your entry. After this bullish engulfing candle right here, you make your entry, and your SL should always be this low, okay, of this pattern. Or you can, if you want to expose, maybe protect your trade very well, you can go below the other block, right? So but either ways, you are still going to be profitable, guys. So this is your entry if you are using double bottom, right? Then if you're using a break of trend line, you're going to make your entry at the close of this. Okay, once the price closes above the trend line, you are going to make your entry. If you are using break and retest of trend line, this is where your entry will be, or you are making your entry here. So once the price break and is retesting, you are going to make your entry. Your SL should be below here. So if you are using break of trend line, make sure that your SL is below this low. Okay, the double bottom right here, your SL should be below here. Then your TP, you know what I said, times 2 times 3. The lowest is times 2. Okay, we are taking it to times 3, times 4, or times 5 of our SL. Okay, so any of these things that you want to use, you can easily use them for entry. You can see after that the price massively push towards the upward side. I'm talking about what just happened. I'm not saying, you can see the current price right now. It's not something that have played out for 1 year or 2 years. It's something that you can pick each and every day. If you put in maybe 3 different or 4 different indices that you'll be monitoring, you might have a setup 3 times, 4 times, or even 5 times in a week. Okay, so that's exactly how to trade this or take this entry. I hope this is very clear. I hope you'll be able to replicate the same thing on a live chart, and even when you are back testing. Another thing I want to advise, if you want to actually make money with this setup, is to go back, settle down, and back test this thing so well. Okay, when you back test, you build confidence. Okay, you build more confidence when you back test strategies. But when you just take something randomly after teaching, you just think that you know it, and you want to apply it in your real account or your demo account, anything like that, you might not have that confidence to know how to follow the strategy, how to manage your trade. Remember, this particular strategy gives you opportunity. Okay, I kind of help you to manage your trade, because you don't need to start thinking of where am I going to put my stop loss, where am I going to put my TP. Your stop loss determines your TP. I said if your stop loss is 20 pips, you already know that you are timesing it by 2, which will give you 40 pips, or you are timesing it by 3, which will give you 60 pips. Okay, so but once the price moves up to 1:2, okay, once the price moves up to 1:2, make sure you break even or you take partial profit. That's what you want to do. If you want to go for 1:3, 1:5, 1:10, okay, remember risk reward. I'm talking about risk reward. Now if the price should go up to 1:2, okay, this is 1:2 right here, this is 1:2. So once price move 1:2, break even or take partial profit, then you can hold your trade to anything you want. Okay, this is about 1:2. I think this should be 1:2. Let me confirm. I've already remove my, okay, so let me check how many before. This is about 1:6 risk reward right here, the move. So you just need to understand these things, understand how these things work. Just make sure you secure your account before you start allowing the trade to run to 1:6, 1:5, 1:4. But if you want to be disciplined and you want to maintain this trade, you can decide a particular risk reward you want to use. Make sure that it's up to 2. Once it's not 1:1, I don't have any issue with you. The problem is if you start taking profit 1:1, that's the issue. 1:2 is okay, 1:3 is okay. You can decide that as long as this strategy is consigned, you are going to be taking profit at 1:3. So you set it and you maintain it. Once you hit 1:3, you take your profit. You can decide that I'm going for 1:2. Once you hit 1:2, you take profit. Okay, you can equally decide you are going for 1:4, and once the price gets to 1:2, you break even or you take partial profit and hold the trade until you hit 1:4. Good and fine. Just decide the risk management you want to use or how you are going to be managing your trade. Okay, so that's how this strategy works, and I believe if you do the right thing, this strategy is going to make you money, and it will not just make you money but help you become a consistent, profitable trader in this industry. Hope this is helpful. Thank you for your time and enjoy.